Meatball, did you see your new brother, Mr. Porg? You want one too? How's it going, guys? My name is Andrew. I am a data scientist here in Silicon Valley, and we have done some serious DD, some data-driven DD yesterday with AMC, and today we have even more information about exactly how the stock performed. Yesterday it was up 15% on the daily, and today, wow, look at that chart, up another 14 point change percent, and it will continue to go up until I have predicted a price of 8.08, which was the price of resistance that it had to pass on the 5th of February. So that is the last time we had to cross a price. I did an entire technical analysis on this on the previous video, so if you guys want to watch that, that is currently the price that we want to hit. But what I also want to cover today is the idea that AMC is about to deliver its earnings estimates out of 2 days from now. So right now it is the 23rd of February. AMC is up 15% after being up 15% yesterday, and we are expecting an earnings estimate in 2 days. So let us see what the Nasdaq.com has to say about AMC. They are expected to deliver a year-over-year decline in earnings on lower revenues when it reports results for the quarter ending December 2020. This widely known consensus outlook gives a good sense of the company's earnings picture, but how the actual results compare to these estimates is a powerful factor that could impact its near-term stock price. The earnings report might help the stock move higher if these key numbers are better than expectations. On the other hand, if they miss, the stock may actually move lower. While management's discussion of business conditions on the earnings call will mostly determine the sustainability of the immediate price change and future earnings expectations, it's worth having a handicapping insight into the odds of positive EPS surprise. So, the movie theater operator is expected to post quarterly loss of $3 per share in its upcoming report, which represents a year-over-year change of negative 1,000%. Of course, no one can go to the theaters right now unless you watch the new update video that I put out yesterday, which was about how New York is opening up its theaters at 25% capacity in just 2 weeks. Revenues are expected to be $180 million, down 87% from the year ago quarter. The consensus EPS estimate for the quarter has been revised 37% higher over the last 30 days to the current level. This is essentially a reflection of how the covering analysts have collectively reassessed their initial estimates over the period. Investors should keep in mind that an aggregate change may not always reflect the direction of estimate revisions by each of the covering analysts. Price consensus and EPS surprise. So, right here, thank you, Sieta, for the super right here. Earnings whisper estimate revisions ahead of a company's earnings release offer clues to the business conditions for the period whose results are coming out. Our proprietary surprise prediction model, the Zacks Earnings ESP, has this insight at its core. The Zacks Earning ESP compares the most accurate estimate to the Zacks consensus estimate for the quarter. The most accurate estimate is the more recent version of the Zacks consensus EPS estimate. The idea here is that the analysts revising their estimates right before an earnings release have the latest information. So that could potentially be more accurate than what they and others contributing to the consensus had predicted earlier. Thus, a positive or negative earnings ESP reading theoretically indicates the likely deviation of the actual earnings from the consensus estimate. However, the model's predictive power is significant for positive ESP readings only. A positive earnings ESP is a strong predictor of an earnings beat, particularly when combined with Zacks rank number 1, strong buy, 2, buy, or 3, hold. Our research shows that stocks with this combination produce a positive surprise nearly 70% of the time, and a solid Zacks rank actually increases the predictive power of an earnings ESP. Please note that the negative earnings ESP reading is not indicative of an earnings miss. Our research shows that it is difficult to predict an earnings beat with any degree of confidence for stocks with negative earnings ESP readings and or Zacks rank of 4 sell or 5 a strong sell. You actually get a lot of these reports directly in the Webull app, which you should go ahead and download if you haven't had a chance to already and get off of Robinhood by now. How have the numbers shaped up for AMC Entertainment? For AMC, the most accurate estimate is higher than the Zacks consensus estimate, suggesting that analysts have recently become bullish on the company's earning prospects. This has resulted in an earnings ESP of plus 15%. On the other hand, the stock currently carries a Zacks rank of 2. So this combination indicates that AMC Entertainment will most likely beat the consensus EPS estimate. Does earnings surprise history hold any clue? Analysts are often considered to what extent a company has been able to match consensus estimates in the past while calculating their estimates for its future earnings. So it's worth taking a look at the surprise history for gauging its influence on the upcoming number. For the last reported quarter, it was expected that AMC Entertainment could post a loss of $4 per share when it actually produced a loss of $5.70 per share, delivering a surprise of negative 22%. Over the last quarter, the company has beaten consensus EPS estimates just once, but the bottom line here is that an earnings beat or miss may not be the sole basis for a stock moving higher or lower. Many stocks end up losing ground despite an earnings beat due to other factors that disappoint investors. Currently, right now, there are very few that could surprise us because of the positive news that came out of New York and the fact that the theaters are opening. Similarly, unforeseen catalysts help a number of stocks gain despite an earnings miss. That said, betting on stocks that are expected to beat earnings expectations does increase the odds of success. This is why it's worth checking a company's earnings ESP and Zacks rank ahead of its quarterly release. Make sure to utilize the NASDAQ earnings ESP filter to uncover the best stocks, blah, blah, blah. AMC Entertainment appears a compelling earnings beat candidate. However, investors should pay attention to other factors too for betting on the stock or staying away from it ahead of its earning release. Now, with that thought out of the way, what do you guys think in terms of AMC? How much are you in terms of AMC? And give us an idea of exactly what you want to do in terms of buying and holding. Remember, none of this information is financial advice. I hope you guys have an excellent day, and I'll catch you guys on the next live stream. For now, but not for forever, peace.